All right. Hey, welcome to another episode of the show. This is going to be a great episode. We've got a great friend and client, Brad, that's here with us today. Brad, I want to welcome you to the show.
Well, thank you. Thank you. It's a pleasure to be here.
For sure, man.
For
I'm
sure.
so glad that you could be here. I know you and Sandy are here in Florida, kind of escaping the cold from up north.
Right. Down here getting a little sunshine.
Yeah, for sure.
Sunshine.
Well, and I know even now, because you are a client and an investor with us, you've decided to make a business trip down to Florida to come and connect together with us and discuss the investments here at our headquarters in Florida, right?
Yeah, right.
Indeed. So again, for those of you who are listening and, considering being a part of what we're doing, we're headquartered here in Florida. So now you have the opportunity to come on a business trip to the headquarters and sit down and kind of discuss what's going on. So that's always a good thing. You want to be looking at how you can be tax efficient in your decision making. Praise the Lord. So
what better place to meet, right?
Exactly. Yeah, we had a great time too the other day as well. So
for sure,
it's good.
For sure.
Well, and then now even too, you guys are having a chance, I think, in talking together that you're going to be heading down to the Keys tomorrow.
Right. So we get to extend the business trip.
Exactly. Yeah, go look for some real estate down there in the Keys.
Right.
Definitely envious. It's been a number of years since I've been to the Keys. We used to do I used to organize a dive trip for about 30 to 50 people from our church, and we'd go down there as a kind of summertime thing and just a super fun time. So, but it's probably been, good Lord, I don't even know, 15 years since I've been down there. So
time gets away from you.
It does. Now we've been diving other places in Mexico and Belize and Honduras and Roatan and all like that, but the Keys is beautiful. So you guys will have a great time. So
sounds good.
Yeah,
sounds
for sure.
Good.
Well, and I wanted to, I'm grateful for you to come on the show. I know that it will be a good opportunity for the listeners who are listening, really just being able to talk about, what you have done and how you came to work with us. So I just like to ask you, what had been your investment focus? I know you shared you just really retired, and we'll talk a little bit about that in this past, year. But so prior to that retirement and prior to us working together, what had been your primary investment focus or philosophy, and what kind of things did you invest in?
I think mainly the typical investment in equities, the stock market, like everybody does. And we've done some investing in real estate, but I think management was a big issue there, and it tended to not turn out so well. So I think management's
that's a key.
Management's key.
Well,
right.
And it's interesting too. No doubt, there's a lot of folks maybe that very much like you, that they've invested probably the bulk of monies in their plan has been in stock market type portfolio, but have recognized that real estate's a good area, and so maybe bought some rental properties, but then all of a sudden get the headaches of either the management's not so good, or you're dealing. Some people really soldier it up and go directly, and they're managing tenants and toilets. And, then it's like after about 6 months or a year or 2 years, you're like, good God, this is terrible. Because for you, you were a doctor for what, 30 plus years?
Yep, 32 years.
32 years. Yeah. So again, a professional, a doctor, and then you got a tenant calling with problems or something like that. That's like, not a fun thing.
Not a fun thing at all.
No. Yeah. So,
yeah.
Well, and so what we're thinking about, and again, you're not alone in that, no doubt. We get feedback and comment from people that even too, I mean, like in my early stage in 03, 04, we had a lot of direct tenants, and it's like, I remember even Sarah Jo being like, good Lord, what on earth is all this? Because, we owned a money management company, that like I was the guy you were working with as a stockbroker, registered investment advisor, financial planner. And so I'm, got my suit and tie and all that. And then as we developed the real estate business, we saw how powerful real estate can be, but we didn't have the scale that we have, of course, today. And so I feel the pain that a lot of people go through in that. And so that's also part of why we developed our business.
Right.
Let's ask you, I want to ask you too, so what was it? So you're approaching, kind of that retirement. You're a young guy, and thankfully you and Sandy are able to retire and enjoy life now. But so what were some of the concerns that you had as you have the, portfolio that you've invested in, retirement's on the horizon? What was those concerns that started you to think, hey, I need to maybe look at something else?
Yeah, I mean, excellent question. I mean, and that was a big concern is, your equities, they're telling you, well, at this burn rate, you can take out this much. And I think we've gone from looking at a burn rate to an actual build rate.
Oh, wow.
We're looking at income that we can count on, that, we can live on this and still be growing our portfolio, things growing at a certain rate. And we've replaced our income.
Yeah.
We have our money working for us instead of having to work for our money.
Wow. Praise the Lord. That is awesome, man. It gives me goosebumps just hearing that. I love the quote that you said too. Instead of a burn rate, it's a build rate.
Right.
And, think about that. Good Lord. So again, that's true because again, a lot of times in that financial planning, stock brokerage, investment advisory model, it's like, okay, we can achieve a 6, 7, it used to be an 8% return when I was in that space, 20 years ago now.
Right.
And now it's kind of migrated down where they're saying, okay, we want to not take out more than, 6% or whatever. And then, but it's kind of that, we're going to burn through capital over time.
Right. That was the concern is, they say, well, when you're 90 years old, if you burn at this certain rate, you should be good. I don't like the should be good rate.
Wow. That's true. And, so again, you think about that, like that's a lot of people's situation is like, so you're almost hoping to not live past 90.
Right.
Good Lord,
Exactly.
that's not a confident place to be. So, and then, as you came to that conclusion, a lot of people out there, you say, well, hey, I know real estate could be better, but then I need to figure out a better way.
Right.
Yeah.
Right. And even in equities, I mean, I talked about management. They say you invest in the management of the stock or the company or whatnot. You don't invest in the stock. And that's what I found with Randy is, he's passionate.
Yeah.
And the management's there.
Yeah.
And they're focused.
Wow.
On the individual, rehab of apartment complexes.
Yeah.
Not building new ones, not doing other things. One thing that struck me was when you said, hey, I got a buddy here that wants, here'd be a great place to build a complex.
Yeah.
But Randy says that's not his business.
Yeah, for sure.
Your business is rehabbing complexes. This is what I know. This is what I do.
Absolutely.
And I like that.
Yeah,
I like that.
for sure.
Yeah.
Well, I appreciate that. I was talking with another guy yesterday. It's like what we do a lot of times doesn't appear sexy, but the accumulation and the maintaining of wealth and the outcome is sexy. Right. It's like, so our apartment complexes, and Brad, the story I know you're sharing, it's like I had a guy that was in Vegas, a friend of mine's like, oh my God, we got this great development opportunity, raw land, man, it's going to be killer. And I'm like, praise the Lord, great for you, go ahead and do it. Because again, to Brad's point here, that we really focus on, one thing. We buy affordable workforce type housing that's designed for just regular Americans, blue collar, lower tier, white collar, $35,000 to $50,000 a year income earners in areas where they need a quality, clean, affordable, nice place to live. And so often, where you're invested across a number of complexes, they all kind of feel the same, right? They may be in geographically different areas, but they have the same formula.
Right.
And that's really by design, because we're looking for a certain formula that generates a certain result that provides, stability.
Right. Plus it gives me an opportunity to diversify into individual or separate projects. So, I have that diversity within this individual investment.
Yeah.
We're diversified in different complexes. And that's kind of our plan is, getting so every year you got one or two of them, turning over, because that's ultimately your goal is to turn them over and improve the cash flow or the business and be able to sell it at a profit. And one thing is you make your money going in.
Yeah.
And that's what another thing that's impressed me with you is, you've got your systems in place where you can go in there and analyze this project with your team. And going in, here's what we can pay, and here's what we'll make come on the backside.
Yeah, absolutely.
So that's impressed me with your system, with your business.
Yeah, thank you so much. And so again, that's part of our process, no doubt, is where we incorporate and that's one of the benefits of apartments is that you've got enough scale where there's, 75, 80, 150, 170, 200 units in one spot. So really, we have the ability to incorporate that in its singular business. We underwrite it to account for the vacancies that may occur. And then when we purchased a complex, we do a full scale due diligence with every unit we walk in and look at, all the roofs, all the electrical, all the plumbing lines. There's no stone left unturned. Right. So we know going in everything that's going on with the complex, and then can account for what needs to be repaired and then how it's going to operate. So very, like you said, very systematic approach to it. And that's by design, because then that way, for you as an investor with us and for us as an owner as well, there's no real surprises. It's not like, oh my God, in the second year, this roof is bad. No, we knew that the roof was bad, and we accounted capital for it to be able to replace the roof.
Right. Right.
The other thing I think that you mentioned, which is really powerful, and I'm glad that you did, is that we, based on my investment management background, being an owner of a registered investment advisory firm for 15 years, we do a planning element. So again, it's like a strategy where, you've invested in this complex and it's going to be selling in like roughly 3 years,
right.
Invested in this complex, and maybe the pathway for the plan there is 2 years. And then this other one is maybe 4 years. So what happens is it now starts to begin every year. There's a complex that's kind of maturing in its investment cycle,
right.
And it's
right.
being sold or refinanced. That capital's coming back to you. You get that additional benefits of the capital that comes on the back end.
Right.
And then also we invest into another complex. So then again, that restarts the depreciation, which offsets that income.
That's what I was going to say. I wanted to mention that. Don't want to forget the K1 share. I mean, you get that by having an equity share. You also get a K1 depreciation expense, which helps write off income. Which I mean, that's all part of the tax rules that you get that basically almost writes off your income.
Yeah.
So, you have tax-free income.
That makes you smile, right?
That's
for
a good
sure.
thing.
Like, hey, look, we're all for paying your fair share,
right.
But there's no value in paying more than your fair share, right?
Right.
And so when you had this stock portfolio, did you ever get a K1 loss like that offset your gains, that really helped you out? Like,
no.
Yeah, exactly, right? Yeah, you had a taxable liability, right? Yeah,
right,
so
for sure.
Again, that's a powerful thing. And if you guys that are watching and listening don't know, it's like
that's a huge tool.
Huge tax efficiency. The government has incentivized the tax structure for investing in quality, affordable type housing, so that then when you make an investment, roughly speaking, you're putting in, we just use average numbers. And again, you can see on our website even too, you put in roughly 200,000 that first year, roughly speaking, it's about $100,000 K1 loss because of the depreciation. And so because of that, you're now getting income that's coming in, but on your tax K1, it shows you got a loss of 100,000.
Right.
And so then, praise the Lord, you'd be smiling too if you had that income in that K1 loss. So it's a great thing. And now again, think about this though, and again, for those of you like, what does that mean? It's like the government has incentivized the tax code to allow for that depreciation loss, because they want to incentivize Brad, Randy, you, and everybody else to invest capital into this arena, because what it does is it improves the quality of the housing stock that is here in the United States. And so it's that really simple that's what they want to do. And they're not as incentivized to say, hey, you invest your money in Google and Apple and all like that, you don't get the tax breaks.
Right.
So that's part of also being wise about it. So let me ask you this though, that now you've been investing with us over the last almost 2 years now, and you made that transition, prior to the retirement and the sale of your practice. How has that affected the quality of your life? So because before you were on this kind of burn rate pathway down to, maybe if I can skid across the finish line and die at 90, I'll be okay.
We should be good.
Yeah. And, and so now that model has changed from a burn rate to a build rate, and with your permission, I'm going to reference that and hijack that term. That is a great,
it's all yours.
Yeah,
it's
for
all
sure.
Yours.
So I appreciate that. So, but so now that you've gone from the burn rate to the build rate, how has that affected your quality of life? Share about what that's meant for you and Sandy.
Well, it's been huge. I mean, when we were analyzing whether we can retire, whether we can't, I mean, we were debating, what do we have to give up? I mean, to be able to focus on that 90, making it to 90. Now we don't have to do that. I mean, now we can live the same lifestyle we had before, and we have enough money to do, change other people's lives. I mean,
Wow.
and part of, like Randy's goal is to change lives of people in the complexes. They have a better facility to live in.
Yeah.
He's changing our life by giving us that income that we can, still support different causes that we.
Yeah. Well, because you guys too are supportive you go on mission trips and support things through your church as well.
Right.
And so, I mean, that is such a powerful thing that instead of, good Lord, and that's a lot of people's mindset out there is like, okay, so I'm going to approach retirement. What can I start cutting out? Like, all right, so I'm not going to take this trip. I'm not going to drive this car. I'm not going to go out for dinner so often, because then I can just meagerly get through retirement, versus now having the financial flexibility and the freedom to continue to live life as you were before, and then giving money to support causes that are, favorable, that God has for your heart and Sandy's heart. Right. And then again, like you said too, how does that make you feel, like being an investor where, as you're invested across these different complexes, we're genuinely improving the quality of life for the people that are living there? How does that make you feel compared to, owning that basket of stocks you had before? Right. Yeah. You're making a difference in this world. And that's what we're here for. Wow. I mean, and that was a big thing for me is, I mean, before, when, like you say, what can we cut? And then, I mean, part of it was giving. I mean, you're thinking, I still want to support these things, but can I still do that? Now I can. Wow. I mean, praise the Lord. That's awesome. And that is so powerful, and just think about that for the folks that, you're listening right now or watching. It's like, that's part of God's overall plan for us, is to maximize and to grow and to be a continued channel of the abundance that's available. But now it's, again, part of your part, just like, Brad and Sandy, you guys came to a place where you started to make those decisions, and that's part of, you got to think it through and see, like, hey, this is not maybe going to best serve me. It's served me okay to this point. I mean, because you were able to accumulate capital, through your working years, through those traditional channels, but then you recognized, hey, this is maybe not going to serve me over the next 30 years. Right. It served me in the 30 years while I was building the practice and helping people in the medical profession. But then now it's like, I got to make a change. And so that's part of the thing you got to look at and recognize. Some of the things that helped you get where you are not the things that helped get you to the next level. For sure. Yeah. For sure. Yeah. And like you say, I mean, it's kind of, before you were looking at a burn rate. Now you feel like, you're snuffing out your life. You're not going to be able to make that difference. Yeah. Now we can. Wow. I mean, that's powerful. That's powerful. And that's, it's a good feeling. And then you can see it just with the, the smile and the enjoyment that you have. You guys are, skipping off now down to the Keys to go have fun with some friends down there as well. And, it can't be all work, right? No, exactly. Exactly. Right. You got to have fun as well too, so. And that's fantastic. And, I think it is, a lot of times people are, they struggle with change, right? Everybody likes to keep things the same. And I know, because even as you were sharing about your story, I thought about me, right? So my degree is in finance and economics. That's what I went to school for. I knew at 18, like, hey, I'm going to be a stockbroker. And that's, boom, I focused on that. Got my Series 7 right after college, jumped into the industry. And then, probably about 5 years later, started my own company, got my registered investment advisor's license as well. And, did that for 15 years. But then I saw the power of real estate, the security that it had, the return that it generated. I bought my first multifamily property in 1999, I think it was. And that was really beginning to be the seed of seeing how powerful that is compared to what was available in the stock market. And even too, we were managing probably at the time, $50 million for other people. But recognizing that real estate is a better mousetrap. It provides better tax benefits, better security, better cash flow. but that was a struggle a bit for me because like I'd always been a stockbroker. I'd always been a money manager, and I had to begin to come to terms to make this change and then ultimately sell that business and move into this, focus of the business. Share with me, like, what was that dynamic for you and Sandy? Because again, you had to begin to make that change and say, hey, we're not going to do this anymore. We're going to do this. What were some of the, hurdles that you faced, or some of the other folks listening may be faced the same thing?
I suppose probably the biggest thing is, like you say, you're making that transition in your life that, well, I'm not working anymore. And, people ask you, what are you doing now? Are you retired? Well, I start out saying I was retired. Now I'm thinking, no, I'm still working. I'm just doing something different.
Yeah.
There's still a fair amount to do. We're doing different things in the real estate world, and so it's just, you're doing different things.
Yeah.
So
keeping active in that way, and being engaged as well. And
right.
and so when you stepped forward to do the first investments into the real estate, what were some of the things maybe that were just, kind of, I don't know if a challenge is the right thing, but again, this is different. I'm taking that step. What were some of the things that you had that were maybe a concern, and then how did we get those addressed for you?
I guess partially you have to have trust. You have to have faith in the people that you're working with.
Yeah.
Randy's the best.
I appreciate that. Thank you. Thank you.
He's over the top on everything that he's doing. That's what's always impressed me. And like you say, you can tell it's his passion. He's not going anywhere.
Yeah. Love it.
I always talk to him, whenever I talk to him, I said, I feel like an underachiever in this project. I'm invested in this one complex. Well, he's been out around the country and looking at different ones, and he looks at a lot of complexes, which is, like you say, when he goes in there to buy a project, either here's what he's paying, which was impressed me. Either this is what it sells for, or it just doesn't happen.
Yeah.
He's not out there just chasing things. You can tell he's looking at a lot of different projects, and either they fit your criteria, or it just doesn't work.
It is. Well, and I appreciate that's the truth. It's like we have a very disciplined approach. We look at a lot of projects. We're in a first-rate position with many of the geographic areas where we get properties that are brought to us off market and through various channels. It doesn't make everything that glitter is gold. So we have a disciplined process that we go through, 30, 40, 50 projects to find the one that looks good. And then, even when that looks good, it's got to meet our specific criteria in order to be a quality investment for us and our investors. And indeed, I love it. It brings together all of my background in finance, money management, the creativity of the real estate, and the passion to help other people, because it's like now I look at, that's why I said you gave me goosebumps when you shared that story in the very beginning, because it's like, that's what we are living for, is to transform the lives of the folks that live in the complex, that they've got a better quality of life living in this, $1,000, $900 a month apartment. And then, the folks that invest with us, like Brad and Sandy, have a better quality of life too, because now it's like you've got joy and confidence about the income that you have. It's not a concern like, hey, I've got to die at 90 in order to make it. What a terrible thought, right? Like, it's like, okay, if I die soon enough, I'll be okay.
It should be good.
Right? Like Morgan Stanley, that's their banner. Die soon enough and you'll be okay.
You're not going to run out.
No, that's terrible, right? I'm not picking on Morgan Stanley, any brokers out there, whatever. But it's like, wow, and so to be able to transition to just greater joy, more fulfillment, the ability to give and to really live and enjoy, that's, I believe, God's purpose, right?
Yeah.
Like, that you're helping other people with the capital that God's put into your hands. You're enjoying the fruits of your labor, and then you're giving to others to help them, and you're making a positive impact where you go.
Right.
So,
right. Yeah. His plan wasn't for you to come sliding in home.
No. It's like, we're going to bring you home on chariots and just slide across the finish line.
Right.
Oh,
So yeah, it's all good. And like I say, there's a camp close by that we like supporting, and like I say, the mission trips, and it's fun. Good stuff, awesome. And it's fun. Awesome. It's fun.
Wow.
Right.
Well, thank you so much. Well, Brad, I appreciate you coming on the show today. It's really great for you to be a part of our show, and even to be a part of our lives. We love having you and Sandy be a part of what we're doing, and really that's our goal, is to help good quality people. And so I'm grateful for you coming on and sharing with our audience. And thank you so much for coming. And I look forward to seeing you guys again real soon.
Right, for sure.
All
Truly
right.
a blessing.
Absolutely. Thank you so much.